Hey, what's going on, guys? Welcome back to the channel. In today's video, I've got a great one for you. You see all these TV shows, these movies where they're promoting these criminals, going in, printing tens of thousands, hundreds of thousands, even millions of dollars to then go ride off into the sunset. It really makes you wonder, where can I myself get a counterfeiting machine? But in this video here today, what we're going to be talking about are the legal ways that you can create a money-making machine. We're going to be focusing on two different methods, and it's truly an infinite money loop. So the moral of the story of the first half is that you need to go check out the TV show Money Heist if you haven't already done so on Netflix. And without further ado, let's jump right in. All right, now listen, if you guys are brand new to this channel, you're just coming here for the first time, well, I want to say welcome. My name is Dalton. This is D-Lits TV, and hey, on this channel, we talk about personal finance, wealth building, as well as all things investing. And I don't stray too far away from that in this video here today. Hey, up front, just so you guys know, my overall goal is to achieve FIRE. If you have no idea what FIRE stands for, it's financially independent, retired early. And so in order to achieve FIRE, really the goal is to have your passive income be able to cover your monthly expenses. And that way you never have to worry about any payments, whether it's your mortgage or your utilities, your phone bill, what have you. Everything is covered by your passive income. Now there's also another tier to that, right? If you want to take it a step further, you can go into what's known as a fat FIRE, where you live above your means while you're retired. Maybe you're grinding it out the next 10, 15 years and living super frugally to be able to achieve this, but then you can live above your means in retirement. So both of which I think I'll be able to achieve with the mindset behind it, right? I'm starting young and I'm on a really great track right now, so long as everything continues. And there's really two main methods that I think you can get there. So number one, I think the main method is through investing. This is one that I've practiced the entire time on this channel. You can go back and look at the history. Number two is through real estate. And that's something that I've been trying to crack into. And I've made a few offers on some different houses, some multi-units, and we'll talk about that more later on in this video. So first, initially, what I want to focus on is the investing portion. And you might be looking at me and wondering, hey, what's your investment style? Well, a lot of you guys may already know me as a dividend investor. I have a number of different accounts. I've got a Roth IRA, I've got a 401k, I've got multiple individual accounts, both for growth investing as well as dividend investing. I also do some crypto investments. So I'm all over the board. I'm just trying to collect assets that are working for me, that are starting to generate wealth. But my personal favorite is dividend investing. And I'll tell you why. I've seen the best results from dividend investing. I've tried to do day trades. I've tried these different methods. I've tried to trade options and do these riskier trades. These plays have never really worked in my favor. And I've seen the most return on my money through investing in solid blue chip, well-established companies that have been here for the long term. So let me pop into the Robinhood investing app. I'll show you my portfolio right off the bat. So this is the $22,000 Robinhood portfolio that I have, approaching $23,000. What I love about dividend payments, if you have no idea what they are, how they work, these companies are essentially paying you an incentive to invest in them. They're paying back a portion of the profits to their shareholders. So if I drill into the history section of Robinhood, you can actually go into show more, click on dividends. These are all dividend payments, companies that I'm holding, and because they're incentivized, they just want to pay me for holding them, right? So you look at these numbers, $12, $16, $7, 24 cents. Admittedly, it's not going to be the greatest return, right? But this is something that grows a ton over time. So let's take a quick look at one of my favorite dividend ETFs, which is SCHD, Schwab's US Dividend Equity ETF, and just get a general understanding for this. So I have a relatively small position in them, around $1,158 invested, 15 shares currently. They make up about 5% of this portfolio. So you can see that I invested in them, and since I invested, off of the market gain alone, I'm up 16%. Okay. So as you're investing in dividend companies or dividend ETFs, theoretically, the value of them should continue going up if you're choosing the correct companies, and you're going to get a nice solid gain on your money should you choose to sell them in the future. Now, another thing is, if I scroll down, you can see that individual dividend that's coming in. So $7.54 in March. These are paid quarterly. So every time I'm paid this dividend, not only has my value of the investment gone up by 16%, but I got an additional $7.54 that I could either reinvest into this dividend paying company or other dividend paying companies. So a lot of people ask me, do I do DRIP, which is a dividend reinvestment program? How that works is as these companies pay you, do you just reinvest that money right into the same companies? I used to do that. I no longer do that. The reason being is because I feel like I have more control. I turn DRIP off and then I can put the money exactly where I see the most value. So I can pick the funds or the stocks that are in my portfolio that maybe aren't performing as well that I see having a potential of bouncing back. So I go in at better values and can get a decent return on my money, perhaps better than if I just reinvested them. So that's where I'm at right now. So I want you to remember that this dividend yield here is 3.03. And this is one of the holdings in my portfolio. The portfolio dividend yield is, I believe, higher now than 3.03, but just keep that 3.03 in mind, because what I want to talk about is how you can actually value getting a certain amount of income per year in dividend payments alone. All right, so there are some variables to this equation, which we don't really need to get in the weeds of it, but on the screen, you can see the simplified equation for how to achieve FIRE. You take your annual expenses that you have divided by the dividend yield of your portfolio, and that way you're going to achieve FIRE. So you remember I said, let's remember that 3.03% on SCHD. This is assuming that all of our money is in SCHD right now, which you probably are going to want to diversify. Just because I like this fund doesn't mean you need to invest in it. You're going to want to look elsewhere, but just keep that in mind. So we're going to take a monthly expense rate of $2,500 per month, and let's multiply that by 12. And you're going to get $30,000. So this is just an example right here. And off of a $2,500 monthly expense, you need $30,000 annually in order to cover those expenses. So if you look at this equation, we'll take that annual rate of $30,000. And we're going to go ahead and divide it by 3.03. So if you do that off of this equation, you're going to need around $990,099. And if you want to be exact, 1 cent. So this would be the FIRE number if you had $2,500 every single month in expenses, equating to $30,000 annually. And you might be looking at that number. You might be super worried. You might feel like, hey, I'm never going to get there. But just remember that you don't necessarily need to have dividend income be the only thing that's covering your expenses. This is my goal, right? I truly feel like I'm going to have well over $1 million invested in the stock market one day. And I urge you to come back to the channel way later on, check it out and see if I actually make it there. But this isn't the only way that I'm planning on offsetting my income. So I work a 9-to-5 job. I've also got YouTube side hustle. The more income, the more revenue streams you can create, the more you can invest and the more you can get your money to work for you. So not only do I make money from my 9-to-5 that I'm putting to work, I'm making this money from this side hustle that I'm also putting to work, but I'm also starting to build another stream of income, and that's going to be through real estate. And this is a really simple concept as well. This is something that I've worked towards getting, but I haven't quite got there yet. You see, of that $30,000 expense, a majority of that would come from your living situation, your mortgage, maybe your rent payment, whatever's going on in terms of your living situation, right? And so can you imagine what would happen if that equation, right? If your rent was taken out of it, if your mortgage was taken out of it because you had somebody else paying your mortgage. So my number one goal right now for the remainder, I guess, of 2021 is I'm looking for a good deal in real estate. I'm trying to buy a multi-family property, and in the area I'm looking, it's super competitive. There's a lot going on, but if I find the right property, what should happen is I should be able to get a multifamily unit, a duplex, triplex, or a fourplex, where I'm living in one unit and the other side is paying for the entire mortgage, right? So what I really like about this real estate route is that not only is people going to be living in that other side paying for the mortgage for me, but also I can take on roommates if I want to, really extend the income that I'm taking in order to just save more and more money. And here's the thing, I'm not going to stop here. So I'll be straightforward with you. My plan in real estate is to try and acquire a new property every 1 to 2 years. And initially, I'm going to be starting off in multifamily units because I'm comfortable living in a multifamily unit right now. Now, when I raise kids, right, when I have a family, when I'm more settled down, I'm obviously going to want a single family home. But I honestly have no preference right now. And it makes more sense to have somebody else paying for that mortgage. I could take a single family route. And honestly, that could happen in the future, right? But my overall goal is to try and get multifamily so I can maximize the income coming in. So again, you look back at that equation, if you take housing out of that, that's like at least got to be, 30, 40% of the cost of the expenses that you may have. And that is a huge weight off your shoulder, which will allow you to get by on significantly less money. So again, as you're scaling up that real estate, you're going from one multifamily unit to another multifamily to another, then you're getting single family, you're renting all of these things out, you're generating way more money that again, you can recycle back in. This is the infinite money loop. This is exactly how it happens. Your money starts going to work for you. You get paid for putting your money into certain areas and you just continue putting your money there. And trust me, it grows, it works. It may be a little bit slower than you want, but over the long haul, if you have this mindset, you're going to do extremely well. And so ironically, I put out a video talking about how I'm going to achieve over $1 million invested. If you want to check it out, go ahead and click the link to the video right now. But anyways, guys, I just want to say thank you so much for checking out this video. If you took any value away from this, if you find these topics interesting, please like the video. It just promotes it on other homepages. It gets my message out there. It shares this channel and it would really mean the world to me. So thank you so much for checking out this video, guys, and have a great day. Did someone say they wanted a dab?